Good morning, everybody. Hope you had a great evening. We cooled down a little bit yesterday after almost 70-degree weather over the weekend into the mid-50s. Forecast to be pushing 70 for the rest of the week. So that is about 15 degrees warmer than normal for this time of year, but I'll take it. The moisture continues to run north of us and south of us. I mean, the split really is over Kansas right now, and the hard red winter wheat crop, which is people food, which we export half of our crop, needs moisture. Not critical right now, but we're already behind about an inch on precipitation. Last year we ended up about 7 inches behind. So could see that crop gets stressed if the rains don't pick up in March with these warmer temperatures. Okay, not a lot of news overnight. Probably the biggest news is the dollar strengthened. There's two ways to make money on U.S. securities. One, in the security themselves, if they happen to appreciate. On financials, you get paid a higher coupon rate than you do in the EU for sure. So two ways to make money. That makes it pretty easy for money managers, and that should keep the dollar appreciating. For our companies that get a lot of their business on export, it hurts. For European countries who have been trying to increase their exports outside of the EU, it's helpful. If you're a multinational with manufacturing plants in the United States and in Europe, you'll be able to weather the storm nicely. So that's where we find ourselves. So the dollar has resumed its rally after a one-day hold out of the European beginning of the QE1 out of the European Central Bank, and I have yet to see the details on that. Yesterday they were worried about whether they could spend the $60 billion. So today, the 3-year auction and the direction of the ES are the two things I think that'll drive the trading. Jolts, 5.07. It keeps getting bigger each month. It's taking as an indicator of job strength, and when it increases each month, it shows demand for jobs. We have wholesale inventories at plus 0.1. You'd like to see that at plus 0.3, showing that the economy is growing. It's showing that the economy is slowing down. And then we have the business small business optimism indicator at 99.2. And I hope that's true. We desperately need job growth in the United States. Jobs are what the Fed has really failed to produce. With population growth, people coming into the workforce, with people that have lost jobs, unemployment is much closer to 10% real unemployment than it is to 5%. And our government touts this almost full employment number, almost to 5%. It's baloney. That's because people have dropped out of the workforce, and everybody pretty well knows that. So I think the dynamic today that the E-mini is lower should help the 3-year auction. The market's probably going to trade up anyway based on the 3-year auction. We've got volume up here at 28. That's the attractor. The first sells 27 to 31, a little bit higher. Really like the buy side better, and then 3 to 7 for sell 2. The buy side last rotate stopped at 18, so 21 to 17. Like to get it done closer to 17, as you could well imagine, and then 9 to 13. So news isn't going to be too big a factor today. I think the direction of the E-mini will have a lot more to do with support for the financials than this morning's news. The NOP spread strengthened overnight, and it's really it's a it's a good indicator. I'm going to get Peter to build us a line that we can put add to our charts, even to the market profile charts, just to be very helpful. It's a good directional indicator. And if it's expanding, it's bullish. If it's contracting, it's bearish. Okay, looking at the ZB, similar situation. It's really, really difficult to move paper in a down market. So we've got volume right here. Now, I keep emphasizing this. High volume numbers are attractors. Low volume numbers are stoppers. It should be true for all markets, for all time frames. And I'm just doing this to reinforce that point that I try to make. Okay, resting, low volume numbers are support and resistance, and a lot of people are finally catching on that, so a limit sell at 58.02 structurally would be the trade. And if the news doesn't change, eventually you get back to 56.24, which is where we're building volume or value these days. So here we are. I think we've got a chance to move this one higher, so 23 to 27, sell 1. 31 to 03, sell 2. Buy side, last rotate down, stopped at 8, so 5 to 9. We've got a little extra volatility here. Hopefully that can get us in. May have to pay 13. So a lot of it depends on what the mini's going to do. And then leaning against this high volume number, we'll make 29 to 01 for buy 2. Okay, the gold market, we still think gold is headed down. The world's economies are recovering. Europe is growing, all this good stuff. We talked about the last 2 days, last week and yesterday, the best supports in that 55, 57 area. We like that. Our first buy last night was 60 to 62, so we're going to leave that the same. 60. Actually, we're going to make, 57 to 60 buy 1, and then buy 2, 50 to 52. We're going to pick that up right down here. On the sell side, 68 to 70, sell 1. 74, 76, sell 2. Greece and the European Union are working towards a deal. Greece is squawking and saying ugly things, about as ugly as they can make it, and still keep the checks coming from the European Central Bank and from the EU. Kind of like a spoiled child. They need the money. I mean, there's no way to get around. There's only one checkbook out there, and it's the European Union's checkbook, and like it or not, they're going to do what the European Union says. Now, that may make them mad, and, you know, nobody likes a rich uncle, that they have to borrow money from time to time. But it's, I mean, it's just the way that it is right now. And scream, howl, squawk, do everything that you want to do. But you are going to pay up. This market's headed lower, so 107 even, 107.10. I mean, there's a chance it might hold in the 20 to 30 area, but I think I like leaning against the buck, and it's 675. The official targets have been par, parity with the dollar. This 50 area, 50 to 60, is pretty aggressive, sell 1. Then our 70 to 80 area will be sell 2. Nothing the European Union does or the European Central Bank does is supportive for the euro. The euro is headed lower. And they want it that way. They want to increase their exports outside of the European Union. That's easy for a central bank to do. Lower and raise interest rates, devalue a currency. What's very difficult for a central bank to do is create jobs. And that's what the Europe needs. That's what our country needs, is jobs. And you do that through tax and industrial policy. You don't do that through interest rates. So, you know, at one hand, you almost have to feel sorry for the Fed every time they try to do something to shore up or to compensate for the lousy policy out of the administration. Restrictive. I mean, they're shutting down utility plants right now. The cheapest energy on the face of the earth is coal. It's a little bit dirty, but you can clean it up. The most desirable form of energy from a pollution standpoint would be natural gas, where Mother Nature eats the waste or byproducts. From a CO2 standpoint, nuclear is the way to go, but you do have disposal problems with hazardous waste. And so they all have their drawbacks, but if you were going to create a clean energy program, you would gasify coal in the ground, you would do natural gas, and you would do nuclear. And you'd save crude oil and heating oil for transportation fuels. Thorium is coming. That would solve the waste disposal. And thorium was on an equal footing with fission back in the 50s, but out of fission you get plutonium that you can make weapons with, and that's why thorium was dropped. But I imagine in the next 25 years we'll be looking at thorium reactors, except for those controlled by the central authority or the governments, where they use it to make nuclear weapons. Okay, crude oil. This 49 area has been reasonable support. Most people think crude's on its second leg down right now, but buying against 49 would allow them to get stops below yesterday's lows. We've rejected prices below 49 right there. That'll be buy 1. And then 48.50 plus or minus for buy 2. On the sell side, London's high is 50, so 50, 50 and a quarter, sell 1. This thing can be all over the map. I don't worry about my calls too much for this one. Sometimes they're spot on, sometimes they're not, but there's so many opportunities in crude just off of our methodology that you don't have to waste a lot of time worrying about. Now, when they all line up and everybody's on the same page, everything's on the same page, it's better, but that's not the critical factor. The methodology is. Okay, we had a one-day rally in the E-mini. It is selling. I don't think a hell of a lot has changed. The Fed is going to raise interest rates sooner rather than later. QE 1, 2, and 3 have driven stock market prices since March of 2009. Sell indexes. So right here, the 65 area, so 64, 66, sell 1, 69, 71, pick this area up right here, sell 2. On the buy side, 55, 57, let them go a little bit lower. Best number to get long against would be 20, 50, where somebody will cover their shorts. So 50, 52 will be buy 2. This morning's news, JOLTS 5.07, don't think anybody pays attention to it. NIHB small business indicator at 99.2, that's higher than last month. Wholesale inventories at plus a 10, that actually is not a very good number. That shows economic contraction. So there you have it, folks. Take about 20 minutes to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible. We're going to try to get a couple of live trades again today like we did yesterday, and hopefully I'll be able to record at least one of them. That is a problem, having to switch machines like that. Back with you in a few.